Just wanted to do a quick hitter today, guys. This SVB bank collapse entering the news is a good time, is a good place to reassert and remind everybody that the 2008 crisis, I keep seeing all of this coverage of the housing market and how the housing bubble is out of control and how it's due for a collapse, et cetera, et cetera. And implicit in a lot of these videos is a really interesting intellectual fallacy or a misremembering of what happened, and inaccuracy, inherent in a lot of these videos about whether it's the housing market or the auto loan market. There's this implicit misunderstanding or misremembering or even intentional, I think sometimes misremembering of what happened in 2007, 2008, in that it wasn't just a bubble, right? There was a mortgage bubble. But what caused the Great Recession was not the mortgage bubble, right? Because what popped that bubble was a musical chairs situation that emerged in the banking sector, right? As banks became, freed up to dabble in more and more exotic and arcane collateralization and securitization mechanisms, and they were actually allowed to distribute the risk or distribute the allocations of mortgage-backed securities and do that in more and more complex ways, right? This sort of house of cards was built, and at the same time, you had a moral hazard emerge in the ratings agencies, right? The people that were supposed to be holding the banks accountable were also kind of undergoing this moral hazard where, the numbers were made up and didn't matter. So it ended up causing the collapse, the mortgage bubble, the subprime situation did create that sort of asymmetry in the market. It created this problem in the market. But there's this really problematic way that this is spun even today quite often, which is that, this profligate spending by the American consumer is what caused this collapse to happen. And this is obviously a kind of victim blaming in a way, right? It's blaming the people who were taken advantage of by these organizations, these incredibly sophisticated financial institutions, right? Just trying to live their lives for the most part. Who were really sucked into this incredibly collateralized, securitized, shadow realm of financial instruments, right? And when the music stopped, certain organizations, Lehman Brothers comes to mind, were left holding the bag, so to speak, on these securitized, collateralized, arcane tranches of loans that had been so, redistributed and reallocated, and then had been slapped with, had sort of meaningless grades slapped on each of these tranches of risk that nobody knew who owned this stuff. Nobody knew what it was worth or what it wasn't worth or what risk was associated with it. And that process, the chickens coming home to roost on that particular kind of instrument, is what caused the panic. That's what caused this sort of black swan kind of snap event, which set off all the rest of the chain reactions. And that, what it exposed was the subprime problem. It exposed the fact that people had gotten into houses they couldn't afford. It exposed a lot of, stuff under the surface with the American consumer, but that's not what caused it. What caused it was banking greed, right? So it's an interesting connection to SVB Bank today. I'm not saying that's what's going to happen with this in Silicon Valley or anything like that. We don't know yet how systemic these risks are. We don't know how interconnected this bank is with other organizations. It seems to me that at this stage, what you're looking at is a bank that owned a lot of bonds that are now, the payouts for those have changed, right? And the way that the bank planned to make money from those investments has changed. And then they, to address that, they tried to sell some stock. That sets off a panic, and you have a classic bank run, and now we are in the situation we're in here. I don't think we have any reason to think that this is going to go systemic the way that things did in 2008, but it's just a reminder that you have to stay critically thinking about this, right? That, what causes these problems is a systemic exposure to risk across the banking industry. So if it turns out that that's something that's happening with a lot of other banks, maybe we've got a bigger problem. I don't think that's what's happening, but just a reminder that whenever you hear people blaming the, American homeowner for it, it's like, or blaming workers in the tech sector for this kind of stuff. It's usually not an accurate representation of what's happening. You have to stay kind of critical to that, skeptical to that, because it's usually not the people at the bottom of the pyramid who are causing this problem. It's usually decisions that are made in these institutions about how to handle risk. So we can only hope that the way that SVB was handling risk, it doesn't have a lot to do with how other financial organizations were handling risk. Thanks for watching, and looking forward to your comments on this one below.